Chairperson Dr. Kunruan, distinguished guests, ladies and gentlemen, good morning. Chaminda and I will present what determines the quality of a country's financial authenticity, examining the impact of foreign and domestic market size. This study examines what factors would determine the national financial legal structure of a country. This is one of the factors which determines the economic security of the country. So in this study, we analyze the impact of global and domestic market size on formulation of financial legal system in using a sample of 145 countries. World economy has been affected by organizational changes due to the domestic market as well as the global market. This situation will worst when a country's national economy does not apply quality financial legal structure and the best practices on financial matters. Further, the application of financial legal structure in global market also affect the domestic market. As an example, we can consider about the hedging agreement between Ceylon Petroleum Corporation and Standard Chartered Bank in Sri Lanka. In this situation, Sri Lankan government had to pay large sum of money due to the unawareness of proper legal financial system. Further, as per the decision taken by Securities and Exchange Commission will influence the fluctuations of the stock market activities. I would like to emphasize at this juncture the quality of country's financial legal system is one way of understanding strength of economy. And also effective financial laws enhance investor trust and foreign investments. Sequence of the presentation is on the screen. We are mostly concerned for our study on the domestic market factors and the global market factors. As far as the domestic factors are concerned, we have gathered literature regarding to the low level of transparency and accountability, effectiveness of implementation and political influence. And also under the global market factors, we were mostly concerned about forced by international organizations, complying with global standards, high level of transparency and accountability. The literature regarding to this factor, according to the Pfister, he said the national financial legal structures are influenced by the global market framework. So likewise, the De Jong and De Jong Martins also mention about further more about this. And this is another literature review by the Pfister. Based on this literature, we have concerned the variables of the study, regulations of securities exchange, strength and auditing and reporting standards, the efficiency of legal framework in settling disputes, and affordability of financial services and protection of minority shareholder interest. Based on the literature review, we derive 5 hypotheses. Foreign and domestic. First one is foreign and domestic market size have a significant impact in determining regulations of securities exchange. Second one, we decide to get as foreign and domestic market size determine a country's strength of auditing and reporting standards. And third, foreign and domestic market size determine the efficiency of legal framework in settling disputes in a country. And fourth is explain foreign and domestic market size impacts the affordability of financial services of a country. And finally, foreign and domestic market size determine the protection of minority shareholders. Ladies and gentlemen, may I now call upon Ms. Chaminda to continue our presentation.
Good morning to you. So, I will continue with the research methodology part. Of course, as mentioned earlier, the study covers a global perspective. This study basically look upon on the world economy and how the financial legal structures are determined in national perspectives. So in this case, we gather data for 145 countries and data were available in the Global Competitiveness Report, which is published by World Economic Forum every year. So the the Global Competitiveness Report is a very significant report which is published by the World Economic Forum, and also most of the academic researchers, professional researchers, and as well as government policymakers use this indicators and index for their policy making purpose. For example, in Sri Lanka, the respective authority to give data in order to compile this report is the Institute of Policy Studies, which is known as the IPS, headed by Dr. Saman Callaghan. So these are the basic criteria that the report considers in compiling or indexing the competitive levels for each and every country. There are basically 12 indicators. Although there are 12 indicators, there are subcomponents. Of course, in determination of the sustainable development, or I think if you have gone through this detailed report, almost all the indicators are there. Maybe you can find all the indicators you want to in terms of infrastructure, business, health, technology, in all the perspectives are analyzed and they are indexed as per the competitive level. And for the data analysis purpose, we applied several analytical techniques. For example, descriptive statistics and correlation analysis and multiple regression analysis in order to examine the hypothesis for market impact on the determination of legal college structure. And basically we applied multi-collinearity checking in order to identify the excessive correlation among independent variables. If we don't consider this fact, the outcome of our results, the outcome of the study may not be reliable. In order to avoid this excessive correlation among variables, we verify the VIF, which is the variance inflation factor. And these are the variables of the study, which is categorized into 3 phases. First one is the independent variable in terms of market size. We have divided market size based on our literature into domestic and global. And the determinants are of course given by the competitive report itself. And there are 5 dependent variables in terms of the financial legal structure. And the way of collecting data for these indicators are, of course, the IPS will collect data through questionnaires on behalf of the World Economic Forum. And we also have two control variables in terms of population and gross domestic production. If you don't control some variables in order to identify the regression, the result may not be purely reflect the relationship. So we have controlled, because in this case we have identified all countries developed and developing regardless of their stage of development. And these are the results of our study, some descriptive statistics depending on the measurement of the variables. And the results of the Pearson correlation. You can see here how the variables are correlated. As I mentioned earlier, in our study we are happy about the interrelationship between variables. Independent variables are not highly correlated. I mean, the excessive correlation cannot be found because the VIF factor, as you can see below, it is very well below the accepted norm of the level of 10. So which means the variables are and the correlation among variables are in a very good position. These are the result of the regression analysis. You can see that there are 2 control variables known as population and GDP, and there are 2 independent variables, domestic and global market size. In this case, you can see that all the variables are significant for the global market influences in order to determine the financial structures for a country. But when you come to the other side, which is the domestic market size, only one variable is significant, which is the strength of the auditing and reporting standards. So in this case, all other variables, other indicators such as R square and adjusted R squares are in a very good significant position. So what would be the conclusion? the first hypothesis, we discuss regulations of securities and exchange. In this case, of course, it is determined by the global market structure has a very significant effect rather than the influence of domestic market. So these may be factors, for example, the level of FIDs and the influence of other governance bodies such as IMF and World Bank and World Trade Organizations. And of course, for the second variable, as you can see, the strength of the auditing and reporting standards are significant for both independent variables. So although it is significant, we have identified some other international aspects as well. In other case, settling dispute in a country's financial legal structure. Of course, as previously mentioned, Sri Lanka had to get the support from the Association of International Arbitration in order to resolve the hedging transaction dispute. So likewise, we have identified some other aspect, but I'm not going to talk in detail. But when you, although we have discussed these things in a global perspective, how can we apply in the Sri Lankan or national perspective? You can see, if you were there in the yesterday's management plenary session, Professor Dr. Singh also mentioned that one of the very good indicators that Sri Lanka, in order to identify the development of Sri Lanka, is the Global Competitiveness Index. So you can see in the recording, in past 2 consecutive years, Sri Lanka has been upgrading our position in a very good position from 79 to 52. And there are some other very good indicators that are related to our financial analysis. You can go through these things. And but also there are some other aspects that we have to update. Although we are in a very good position, for example, tax rate and tax regulations. So in this case, the people or the respondents of this questionnaire have put their more concern about these regulation applications and policy instability and access to financing. These are the other indicators that we found which related to our analysis, and I think all indicators are in a very good position out of 145 countries. Conclusion. So depending on our variables and the constraint, we conclude that the level of countries' involvement in the global market practices has significant global influence rather than the domestic involvement. And the policymakers may pay attention to adopt what are the emerging global financial regulations rather than the standard into local context depending on the contextual factors. And finally, related to our conference, final conclude that the quality of financial regulations is a significant factor in determining the national economic security. As a whole, it's a national security. Thank you.